Good evening, everyone. Welcome to the first-time homebuyer webinar 2025. We've got quite a bit of information packed into this presentation. Just a little housekeeping. What we'd like to say is if you can hold your question, we'll do a Q&A at the end, basically, but please utilize the chat function. If you want to, when your question pops into your head, do us a favor and just dump it into the chat feature. And what we'll do at the end of the seminar is we'll be able to review and answer all the questions that are in the chat. So my name is Ron Kraft. I'm here with Julie Vella. We're both mortgage originators here at Family First Federal Credit Union.
Hi, this is Julie. So I just want to talk about a little bit of who Family First Credit Union is. And so basically, we've been serving our members since 1969, so it's been a while. And we began as just a single branch serving Penfield School District employees. And we were known as like the Teachers Credit Union back in the day. And now we have 5 branches, and we're owned by over 15,000 members. So as a credit union, you do have to have a membership into the credit union, and it's easy as residing in Monroe and surrounding counties and so forth. We also aim to provide secure and innovative financial services to our members. We have all types of loans here, but Ron and I specialize in mortgages.
We are a nonprofit organization, and we're focused on our members. So people always ask, well, why should I go to a credit union? Well, the reason you should go to a credit union, there's a couple great reasons to go. Number one is if you're a member, you're one of our owners, you're our shareholder. And you hear about the big corporations always having to answer to the shareholders. Well, if you're a member, we're answering to you. So we're trying to help you out. We're trying to take care of your needs. Because we're a not-for-profit, we get lower private mortgage insurance rates. We'll get into PMI a little bit more into the presentation, but if you're putting less than 20% down, you're going to pay a monthly PMI charge. And because we are a not-for-profit, we get reduced MI. We do also all our work here at the Penfield branch as far as processing, and that allows us to turn things around pretty quickly. The whole team is here, the processing, the origination, the underwriting. So it all happens right here. We are service oriented. We're basically known as people helping people reach their financial goals. And again, we are local, local, local. Everything happens right here. We do our servicing. We have Alice in our servicing department, and you're not going to have to call 1-800. You just call our number and ask for Alice, and she'll help you out.
So there are some common terms that we just want to explain, because sometimes we get questions on what these are exactly. And so we just want to spell out some of these common terms are. So number one is the appraisal, and that is down in the line of processing your mortgage. However, we just want to explain what an appraisal is. Sometimes it gets confused with inspection and so forth. But anyways, an appraisal is a report made by a qualified licensed appraiser who sets forth an opinion and uses comparables and comparable sales to determine the value of the property. So every time you're purchasing a home, you are going to have an appraisal done. The term also refers to a process by which an estimate is obtained. Okay. And the next one is contingency. So we hear this word contingency a lot, and what this means, it's a clause in a purchase contract stating conditions that must be met in order for the contract to be binding. For example, some people have to sell their home they're living in order to purchase a new home. So therefore, that's a contingency. So part of the contingency of the contract is the home must be sold in order for the buyer to obtain financing on the new home. Next, we have the home inspection. So a home inspection is different than the appraisal. A home inspection happens early on in the contract, and it happens by a home inspector who you would hire separately on your own as the buyer of the property. So it's an examination of the structure and mechanical systems to determine the home's quality. So they're looking at the electrical, the plumbing, safety issues such as chipping paint and things like that, handrails that are needed in certain areas. So these things are examined by a home inspector. PMI is, Ron mentioned earlier that as a credit union, we did get discounted PMI, but what is PMI? It's private mortgage insurance. It's insurance written by an independent mortgage guarantee insurance company that protects the mortgage lender against loss and mortgage default. So basically, you only have PMI if you do not put 20% down when you purchase a home. So for even numbers, if you purchased a home for 100,000, you'd have to put down 20,000 as the down payment to avoid the PMI. So the PMI is a percentage that you pay monthly in your payment, and it's incorporated in the monthly payment if you put less than 20% down. Points is another term that you may or may not have heard of, because it's only when you're in the process of locking your interest rate, you may opt to pay points for a lower rate. So that is something that your loan officer, Ron or I, could explain when you're looking to lock your rate in. The option to pay points is there for a discounted rate.
Some credit requirements that we want to let you know about. So typically, we're looking for a credit score that's 620 or above. That's the minimum requirement. If you want to get the best possible rate out there with the lowest possible point option, 740 is the score that you need to be at in order to obtain that. We're typically looking for 3 active trade lines. And by that, I mean, if you have 3 lines of credit on your credit report that are active, meaning they're not closed and they're dormant. So we typically look for 3. If you don't have 3, we do what's called alternative credit, known as alt credit. What we'll do is see if we can find out if you've paid other obligations on time. Your cell bill, your garbage, your utilities, your insurance. We can even use things like if you have a Hulu subscription or a Netflix subscription, but it's got to be $20 or more per month. And we typically like to see active lines for at least a year. So in a perfect world, if you had 3 accounts that were open, they've been open over a year. That's what we're looking for. And we typically review your accounts over a 36-month period. The credit report might report longer, but we're more focused on the more current time period of 36 months. Typically, the 1 year is the holiest, and with Sunny Mae, they really don't allow. They won't approve a mortgage unless you've made all payments that have been on time for the prior year from application. And it's also good if you had any collection items, like you had a couple dollars on an RG&E or say a Spectrum when you moved and they didn't catch up to you. It's a good idea to go on like Credit Karma or check your credit report at annualcreditreport.com to see if there's anything outstanding and take care of that stuff, because that will also affect your credit report.
So earlier I was talking about down payments and how to avoid PMI and so forth, but this is just in general down payments which are allowed on these types of mortgage products that we offer. So conventional mortgages, so a regular standard conventional loan, the minimum actually is 3% down, and that includes our home ready mortgage, which is it's based for folks with a lower income, basically, which allows us to do the 3% down as well. And the requirement to avoid PMI, like I mentioned earlier, is putting 20% down of the sale price of the home. Next, we have FHA, which is a government loan, and that particular one for the down payment, it's required that you put 3.5% down. And also, when I was talking about PMI, this is a bit different, but this is mortgage insurance, which works similar in the fact that you pay it monthly in your monthly mortgage payment, and it's mandatory on all FHA loans. So whether you put 20% down or not, you're still going to pay this monthly mortgage insurance premium in your mortgage payment. Next is Sunny Mae, and Ron touched on that slightly, but Sunny Mae is a New York loan, and basically state of New York mortgage. And this one is a minimum of 3% down. And also we have USDA, that's for our rural areas. So the area that you purchase the home in has to qualify to be in a rural area. So with that, USDA requires 0% down. And that's also a government loan. And then we have VA, which is for our veterans, and that one's 0% down as well. And there's no monthly PMI on that. So with the VA loans, there's no monthly PMI, no matter how much you put down.
Some of the fees and costs that you need to be aware of when you buy a house, known as closing costs. So number one, you're going to have an attorney fee. New York State is an attorney state right now, and that means you have to basically work with an attorney, and they're going to charge you for that. That's something you need to have a conversation with the attorney that you pick. In addition to your attorney, there's going to be a bank attorney that we're going to be using, and typically the fee for that is $550. Then you're going to have typical closing costs, and by that, we're going to say the appraisal, the credit report, there's a processing fee, there's title insurance, there's New York State mortgage tax, and that can vary depending by county, anywhere from 2.5% to 4.5%. Your down payment, Julie went over all the different down payments. They're basically anywhere from 0% down to 3, 5, 10, 20, whatever you want to put down. You're also going to be required to obtain a homeowner's insurance policy. This is one of the things you should do after you apply for your mortgage, is start shopping around for your homeowners. Typically people, they get a quote from who they have their auto insurance with. You've all seen the commercials, the old bundle Ruski. That's typically the way to go. They do give you a discount with the more insurance they write, but we typically require it to be paid in advance prior to closing, so that there's enough in your escrow account when the premium comes up in a year, so that we have the money to pay the bill. Home inspection, we talked about that a little bit. That is optional. It's not a requirement from the bank, but it's a discussion to be had with your realtor. If there's anything in the house that you think might not be right, or you just feel you need it. The market is very competitive right now, and I would say that most people are not doing home inspections because they don't want to cut their chances down of winning the bid in the house. And also real estate taxes, we're typically going to ask for a full year's worth of taxes to go into escrow. We'll put some money in your escrow account. Some will also be used to pay back the existing buyer that has paid the taxes in advance. We're in New York, everything's done in advance. So you're going to have an escrow account where funds are going to be sitting there and they're going to be dispersed when tax bills are due. Typically, town and county are due in January, February. School tax is August, and you might have a village tax as well, which could be June or July. So all that gets escrowed. And the good thing about that is it goes into your payment monthly, so you don't have to worry about if you get a tax bill. There's already money in there and it's going to be included in your payment, and we take care of it. You don't have to worry about budgeting for it.
So the mortgage process. So first of all, you're going to want to have a pre-approval. Your realtor that you're working with is going to ask you for a pre-approval before they show you any homes or take you anywhere. They want to know, number one, if you're qualified, and number two, how much you can look for in a purchase price for a home. So that's where Ron and I come in. And that would be where you would contact one of us, and we would collect your income information, such as your pay stubs, W-2s, and so forth. And we're also going to run a credit report for you. So if you're not prepared to have a credit report ran, we're not going to be able to do a pre-approval for you, because that's the two items we need right off the bat, is verifying the income and credit in order to pre-approve you. So a pre-approval letter is generated specifying a certain mortgage amount that you're pre-approved for, and also a certain type of mortgage. So we went over the other types of mortgages earlier, and we were starting with conventional, and then we talked about the government loans, the FHA and Sunny Mae and so forth. So we can also let you know what type of mortgage that you qualify for as well. Next, once you have that pre-approval letter, you're going to give your realtor the pre-approval letter. And once you have found a home and you want to put an offer in, you're going to work with the realtor to write the purchase offer for you. Your realtor should really have consult with Ron or I as well, kind of just to get acquainted with each other and who they'll be working with. And also, you're going to have to choose an attorney at the time when you write up this purchase contract. So, like Ron mentioned, New York State is an attorney-only state, so you're going to have your own attorney. And so you're going to want to have these items in place, and you may consult with your realtor, or Ron or I, we couldn't refer an attorney to you because we like to work with real estate attorneys. Home inspections. So we kind of touched on this earlier, but home inspections are optional. That's where you have you hire your own home inspector to come in and inspect the property for different issues in the property. And sometimes it's a little more involved. They go through the entire house and let you know what exactly is wrong. So like Ron mentioned earlier, it's not the most popular thing right now in this competitive market to get a home inspection. So just letting you know that in advance. Application. That's the next thing. So once you have the accepted offer, we're going to want a copy of the executed contract, the executed purchase contract, because that'll get us started. And then once we have that, then you're going to have to complete an application. So you complete your application with Ron or I, and in that application, you're putting this type of information, such as your name, your address, your personal information, your banking information, your income, your employment, and so forth. So that is your formal application, and that's what starts the process into the mortgage.
The appraisal, we will send an appraiser to the property to determine what the market value is. In the way an appraiser basically determines your value, they will look at what current sales are in the immediate area that are similar to the subject property, to the house that you're buying, in age, amenities, square footage, and what have you. So they're basically trying to find something that's as close to your house as possible. And they actually do what's called a grid, where they do the age, the room count, the square footage. They compare it all. And then they come down to an actual value. And again, remember, the appraiser is out there to determine market value. That's all. They're really not going to be concerned with the condition of certain items like the mechanical systems and what have you. That would be up to your home inspector if you elect to have one. So again, they're just more geared toward what the value of the house is. Once we get through the process and you get approved, the bank, the credit union will generate what's called a mortgage commitment, which is basically your approval. And we will send it to you for your signature. There will be, generally speaking, there'll be some conditions on there, like things that you might have to hunt down. Like you might have given us a retirement statement that's 2 or 3 months old and we need a more current statement. So we will ask you for some items. Don't think that we're singling you out. We live by some guidelines that the government has basically developed, and they're somewhat extensive. So we will ask you for things. And again, just don't take it personally. We're just trying to help you and get you to the end of the process. So once all your conditions are in, we've reviewed the appraisal, everything's all good, we'll clear your file for closing. And then your attorney will work with our attorney to schedule your actual closing. And then you get to move into your beautiful new home.
Couple of things here, just a little advice that we've had some experience in the past of what to do and what not to do. And what to do is work with your mortgage originator, work with one of us to provide all the necessary documentation to support your mortgage application as soon as possible. So what Rhonda was mentioning earlier is that as soon as we get this accepted purchase offer contract, it's like go time. We have to get everything moving quickly because there are several dates on your purchase contract that we need to follow. One is the commitment date and one is your close date. So we're going to help you get to those dates, and how you're going to help us is by providing the documentation that we ask you for in a timely fashion so that we can all get to that close date on time. Also, if you're purchasing a home with a first-time home buyer grant, that's even more important. It's imperative that we process this as quick as possible because we also have to get your grant approved. So we got a couple steps here. We got to get the mortgage approved, and then we're going to have to get your grant approved. And so we can't delay on getting those grant funds for you. So it's really important that you send us what we need. And what we're going to need for the first-time homebuyer grants is you're going to have to take a first-time homebuyers course. You can either do it online or in person. Sometimes we suggest online, as it may be a bit quicker than getting in person, but it's with our nonprofit agencies that we work with. So you're going to want to take that first-time homebuyers course because we need the certificate for any type of first-time homebuyer program, which includes any grant and the Sunny May programs. What not to do. So do not apply for new credit while you're during the mortgage process. We don't want you, inquiring it for something else that may drop your credit score. We don't want you purchasing furniture and things at this time. And if you do need to purchase something, you have to let us know in advance, especially if it's a car or something like that. We prefer that you wait till you're out of the mortgage process to do something like that, but always ask us first. Also, do not delay in submitting your loan application. So as soon as you get that accepted purchase contract, we're going to want to have your loan application submitted right away. So do not increase your credit usage. And what we mean by that is if you got a credit card and let's say, you have no balance on it, and then you go and charge $5,000 on it, it's going to affect your credit score. So we don't want things like this to mess it up, and we want to make sure this is a successful process for you. So don't use your credit. Again, if you have to let us know first. This can change your debt to income ratio. It can change your qualifying. It can change a lot of things. Don't make large deposits that are not verifiable. So we always say don't deposit large amounts of cash. There's no reason to do that while you're in the mortgage process. It will delay things and make things more difficult for both of us. Do not change your job. So if you're going to change your job, you have to let us know in advance. We prefer that you don't, because we're verifying your income and what you can qualify for, and changing your job might change that for you. Also, just notify us of any changes, like I just said, of any income into the household. And also, what Ron said earlier is, don't worry if we keep asking you for documentation. It doesn't mean that, don't get nervous that things aren't going to go your way. It just means that we're required to get this documentation to get you approved. So we're all on the same page here. We just want to get you approved, get you in your home. That's our whole plan.
So two originators here at Family First. There's Julie Vella and me, Ron Kraft. Our contact information is on the screen. You can either call us or email us if you're, if you work crazy hours, or if you're up at 1 a.m. and you want some information, send us an email. We'll respond to you the next day and give you what you need. Feel free.
So this is our underwriter, Bill Holyfield, and he handles the underwriting process. And then we have Lisa, who is like our right hand, is our mortgage processor, and she handles the processing. So she may ask you for documentation as well. And again, her goal is the same as ours, is to get you to closing and get the process done and completed.
Our servicing person is Alice Hooker. Again, I told you we're local. So Alice would be the one if you had a question. Say you switch homeowners insurance and you need to let us know that you switch from, say, Allstate to State Farm. You'd call in and talk to Alice, and she would take care of you. And then the manager of the mortgage department is Colleen Perry Curcio.
So I know a lot of people that are on this call may be interested in our first-time homebuyer grants and assistance programs. With the way the market's going and the home prices are going up, we're happy to offer some grants and assistance to our first-time homebuyers.
So first of all, probably the most popular is the Homebuyer Dream Grant. And that will be rolled out on February 10th. And you might have heard in the news in the past few days that the federal government was halting all grants. Fortunately, this is a state-funded program, so it's not going to be affected, so funds will be available. We don't know what our allocations will be yet. They haven't given us any information, any guidance on that. It's funded through the Federal Home Loan Bank in New York, but basically the program will let you use up to $30,000 towards your down payment, closing costs, and taxes and insurance. In order to use the program, you must have an accepted purchase offer to apply for the grant so that we can reserve your funds. So it's fine that you want to use the grant, but you do have to have an accepted offer in order for us to reserve funds. Just keep that in mind. And Julie talked earlier about the HUD-approved first-time homebuyers education course. We have several people in the city and nationally, actually, that we can refer you to if you want to go online or if you prefer a classroom situation. Pat Stone does classes on the weekends that you can take a Saturday and go do. It's from soup to nuts. They'll talk all about home ownership and everything. Basically, as far as income goes, the grants that are offered are all income driven. So you can't make more than a certain amount. And that depends on, number one, what program that you want to get plugged into. The Homebuyer Dream Grant actually has 3 different programs. And they have income limits based on the number of people that are in the program. Julie talked about 30 days of pay stubs. Basically, that's how we're going to determine what your annual income is. There's a spreadsheet that we fill out. We plug in the numbers and it annualizes what the income is. And just to give you a quick breakdown, there will be 3 Homebuyer Dream options this year. One is the regular option, which takes you to 80% of the area median income, known as AMI. And as of earlier this week, we looked that up, and for a 1 to 2 person household, the income max would be $82,960. If you have 3 or more people in your family in the household, your max can be $95,404. That's for the Homebuyer Dream program. There's also going to be a Homebuyer Dream Plus, and what happens there is it fills the gap with people that earn a little bit more income. So the amounts are going to be a little bit higher. So it starts at 80% of the AMI and it can't go higher than 120%. So you have to make more than 82,960, but not more than 124,440 if you're a 1 to 2 person household. And if you're a 3 plus, you have to make more than 95,404, but not more than 143,106. The third option is the Homebuyer Dream Program Wealth Builder. And that's going to be targeting populations that meet the following income thresholds. Basically, you have to live in New York or New Jersey for this and earning at or below the 120% value, which again is 94,404 or 143,106 if you're a 3 plus person household. You can also actually buy in Puerto Rico and the U.S. Virgin Islands, believe it or not, and they'll let you go to 150% on that. The kicker with this is that in order to get this grant, you must currently reside and purchase a home in the Federal Home Loan Bank, New York District, New Jersey, New York, the U.S. Virgin Islands, and there is going to be some additional criteria that are going to apply to this. And we don't have that exact information yet. It's going to be rolled out hopefully shortly because the program again is going to start on February 10th.
Before I hop to the next slide, I was just going to add one quick thing. The Homebuyer Dream Grant requires that you put in a minimum investment of your own funds into the purchase of this property of $1,000. Okay. And so we wanted to talk about that because I know it sounds easy, like, or you may hear, oh, you can get into a house for nothing. Well, not exactly. So you're going to need some funds, especially if you, this grant is the largest grant that we've ever had. And, so you do have to put investment, into it yourselves, and that's the minimum of the 1,000. But also, when you are purchasing a home, just so you know, these grants come in as a credit at closing time. This is not money that's going to be sitting in an account for you. It's a credit at closing. So basically, there's some upfront costs that we wanted to talk about, just so you have an idea of what you're facing when you go to purchase a home. So number one is you're going to have to put a deposit down on the purchase contract. So you put a deposit down in good faith, an earnest deposit. So that typically is a minimum of $1,000. And that can cover your home buyer dream grant $1,000 investment right there. Next is once you have that accepted offer, we talked about having the appraisal, and the appraisal fee in Monroe County is $400. It can change based on if you buy a multi-unit property. It can change if you are purchasing out of Monroe County. And next is we have to run a credit report right in the beginning, right at the pre-approval, and that there's a cost to that as well. For a single, or if you're applying jointly, it's going to be a bit more. And then also, as we mentioned earlier, you have to have homeowners insurance established before you close. So there's a cost of a homeowners insurance policy, and there's a range to that. Could be anywhere from $700 to $800, depending on the property and so forth. So you're going to probably want, if you total these up, in your bank account before you even start looking for a home, you're going to want to have at least $2,000 to $2,500 sitting in your account, because those upfront costs are before the credits for the grant comes in. So we just want to give you a heads up on that, because it's important when we are, verifying if you have your minimum investment, if you have the money that you need in advance. So I just wanted to bring that up. Sunny Mae mortgages. So Sunny Mae, we talked about Sunny Mae. Sunny Mae is a state of New York mortgage. And there's a couple programs within the umbrella of Sunny Mae. And one program is Achieving the Dream, and the other is the low interest rate program. These are the two common programs that we work with here. And basically, the difference between the two is how much your income is. So the low interest rate program allows a higher income, and the Achieving the Dream is a bit lower. So either way, this is always going to be a 30-year fixed rate mortgage. The minimum down is 3%, letting you know that both programs allow you to purchase 1 to 4 units. So you can purchase a multi-unit property as long as you live in one of the units. Okay. So that's actually a good deal, because if you're looking to purchase a home but also want an investment, you can live in the one unit, let's say, for example, rent out the other, and still put 3% down. That's really, really minimum these days. Also, the rate we lock it for 120 days. We talked about, the minimum borrower cash contribution. So now where I talked about the $1,000 minimum contribution investment for for the grant, that also Sunny Mae requires that you put 1% of your own investment into the purchase price. So, for example, if you're purchasing a $200,000 home, you're going to have to put at least $2,000 into the purchase, and that includes that appraisal, includes that deposit that I was talking about earlier. So this is why it's very important to have that couple thousand, $2,000, $2,500 sitting in your account before you even apply or look for homes. Also, Sunny Mae offers a down payment assistance loan, and this you can actually combine with the Homebuyer Dream Grant, which can give you even more money towards your down payment or closing costs. And so it's a minimum of 3% of the purchase price. So back to that 200,000 purchase price times 3%, that's another $6,000 on top of the Homebuyer Dream Grant that you can use for assistance to purchase your home. That's big money. Also, Sunny Mae allows unlimited grants, and that's what I was just talking. You can stack the grants. You can have the Homebuyer Dream Grant. You can do this Sunny Mae down payment assistance loan. So it's a real nice option there. Pathstone. So Pathstone is a nonprofit agency that we work with that also offers grants. So it's outside of Sunny Mae. It's outside of the Homebuyer Dream Grant. It's a separate agency, and they're local, and we work with them as well. But they offer grants also, and they can do down payment assistance loans up to 5,000. No minimum credit score on those. You do have to have those 3 trade lines, like Ron was talking about earlier, about 3 trade lines of credit. This one, however, is a payback. So you would have to pay back the 5,000 over time, but the interest rate would be the same as your mortgage rate. And there you can see the payback term, 1 to 5 years. There's no prepayment penalty, so you can pay this off early, and it gives a max debt to income ratio. So the Pathstone loan that I was just discussing can be used for down payment, closing costs, and taxes. It is a lien that is secured to the property. You must take that first-time homebuyer education course. And the loan, it can be combined with other grants and down payment assistance loans. Sheen Housing is another nonprofit agency that we work with. And Sheen also offers 3,000 for closing cost assistance. This one is nice. I use this one frequently because it's a kind of a quick turnaround. If you are just happen to be short, we can get up to 3,000 for you as long as your income fits into their income requirements. So all of our first-time homebuyer programs have income requirements on them. So there is no interest that they charge on this. However, as a payback of $50 a month for 5 years. It's only for first-time homebuyers. And Sheen does require us a single-family home. And again, you have to complete that first-time homebuyer scores.
Okay, that pretty much wraps up our information. What we'd like you to do, if you have any questions, please utilize the chat, and we'll address any questions that you have. So feel free. No such thing as a bad question.
Never. What do you got? You had some questions in the Q&A?
Nope. So how long does the pre-approval by the bank last is the first question. So typically credit reports are good for 120 days. So pre-approvals are geared around that 120 days. If you need a refresher, just let us know. And we do refresh all the time because the market right now, the home buyer market in Rochester is pretty tight right now. The inventory is limited, so you might be out there searching for like 5, 6, 7, 8 months, depending on your level of motivation. So you might need to come back and let us know that, hey, I'm still in the game. Can you refresh for me? And we're more than happy to do that.
Okay, we have a couple other questions here. And the next one was, how does it work with my income being a 1099? Really good question. So 1099, I'm assuming you're either a subcontractor or you're self-employed in some way. So what that requires for self-employed borrowers is we have to look at 2 years tax returns, 2 years filed tax returns. So the income is calculated in a way which we average the last 2 years filed tax returns. So if you file your 2024s and you got your 2023s and you're self-employed doing the same business, we average your net income, adding back in a few other things, but that's how we determine your income. So the only way that we're going to be able to calculate your income is by providing us with your last 2 years of filed tax returns, showing your business income. And if you work a W-2 job, like a pay stub W-2 job along with that, we're going to ask you for that information as well. I hope that answered your question.
The next question, once we take the first time home buyer course, does that course essentially expire or can it be done this year if I'm looking to buy next year? Typically with the grants and the programs with Sunny Mae, they're good for 1 year. So I would recommend if you're going to take the course, if you're not going to do it if you're not thinking about buying until 2026, depending on what time of the year, you might want to wait a little bit of time before you take the course or do it toward the end of the year. Um, you can do them online at your leisure. They're about $70 if you go through Consumer Credit Counseling Services of Rochester. They hook you up with an organization called Home America. It's all online. You can go back to it several times. It remembers where you were. And then it will send a certificate to you. And if you note who you're working with at a certain, like if you say, Julie Vella, I'm working with at Family First, they'll ask for the email address and we'll automatically get a copy of the certificate so we can keep it in a file so that when you're ready to go, we'll have it.
Okay, so the next one, I appreciate your message. Thank you for the presentation. What is the first step I should take to start the process? Okay, so the first step is right here because you're not going to know what you qualify for or if you have some things you may need to take care of on your credit until you talk to one of us. And we're going to start by taking some information from you as far as your personal information, but also your employment information, your income, and we're going to pull a credit report as well. And it's important that we do because if you did need any help or any advice, we can tell you what you may need to do to prepare to purchase a home. So really the first step is talking to one of us to see how you qualify. If you qualify now or later, we're going to let you know that. And a realtor is going to tell you the same thing, that you need to go right to a loan officer, such as one of us, and get a pre-approval. Next, there is a question about if you put less than 20% down and have to pay PMI, does this last the entire life of the loan? Another good question. And basically, if you're going with a conventional mortgage, which includes a standard conventional, includes our Home Ready program we have for first-time homebuyers and lower income homes. We also have Sunny Mae, which is a conventional as well. When you put 20% down, you avoid the PMI. If you don't put the 20% down like you're asking, you pay PMI until you have 20% equity in the property. Or if you get to 22% equity, the bank or the lender that you're with will automatically remove your PMI. If I were you, I would be looking at the balance of your mortgage, and you're usually provided an amortization schedule at closing, and you're going to look at when the PMI drops off so that you can go to your lender and say, yep, my PMI is ready to drop off, and then they'll consult with you when it's going to happen. The next question is there an age limit for a first-time home buyer? Meaning, okay, so the youngest or the oldest, no. The youngest, yes, I believe it's 18. And the next question is, if you have 2 years of a W-2, but currently working under 1099, which income would you consider? We have to consider the current income situation that you're in. So even if you had W-2 income in the past, we're going to consider the current income that you're receiving. So it's tough that you have to have those 2 years of self-employment behind you, but that is just the guidelines. It's not just here, it's most all lenders, but you have to have 2 years of working self-employed with the 1099, and that has to be 2 years of filed tax returns. The next question is, if I'm getting some money from my parents, should I put it in an account ahead of time? Yes. Don't take the money and put it under your mattress. We're going to want to verify where the money's coming from. So the best thing you can do is take the money and put it in an account because it has to be sitting there. It's called seasoning. We have to have it sitting in there for at least 60 days, unless it's you get the gift and it's coming from a family member. And if you get it by via check or bank transfer, we can verify who it's coming from with a gift letter. Then it can be less than 60 days, but it has to be a verifiable source. And like I said, a paper trail is the best way, and that's with a personal check or a bank transfer or a cashier's check.
Would this program be appropriate for someone who's filed for bankruptcy? So every program, mortgage program, is going to have different guidelines for bankruptcies. I believe FHA is 3 years?
2.
2 years. Conventional Sunny Mae is 3, 4. So depending on when you filed and what your filing status was, like was it a 7 or an 11
or 13?
or a 13? It depends.
It depends from the discharge date.
Right.
Right, Ron?
Yep.
Okay.
So we need a little bit more information. So feel free to give us a call or email.
Okay. Here, I don't have an account with you guys. When should I open it? Here's the thing, for any type of product here that we offer mortgages here. We offer auto loans, personal loans, all kinds of things like that. But everything that you want to obtain, such as, let's say, a mortgage, you have to be a member of the credit union, and opening a savings account is the way you become the member. So feel free to open at any time. If your plans are to work with us and obtain a mortgage, you can open that account anytime. It'd be a great place to start saving for your mortgage and your purchase of your home.
So there's a couple questions about people buying with, say, non-spouses, which is fine. There's no limitation with respect to that. We can count both incomes. You don't have to be married. You can live together. You can be friends, however you want to structure it. If you're trying to do a grant program, we're going to count both incomes toward the income cap. If you're going like a regular program without a grant, if you have enough money, and it's not a grant-driven program, we're just going to count both incomes. We can't, I don't think there's any program out there that says you can't be friends or non-spouses. You could just do everything together and we'll just count everything together. That's how we, and everyone actually in the mortgage business would treat that situation. So you don't have to be married. You can just be friends buying a house. Some people buy, I just had some people buy a double, and it was 2 friends and they lived in each side. So it's easily doable.
Okay. So, oh, okay. It looks like somebody had put some information here, and it's great because it's exactly true. And just a heads up to anyone who's looking to start the homebuyers course, ehomeamerica.org has the course, and it's $75 with the coupon code CCCS eHome25. And what Emily just put in there for us is, if you go to that website and you want to take the first time homebuyers course, that's exactly what it is. It's the cost is $75 with that code that Consumer Credit Counseling Service of Rochester is offering. So thank you for that information.
Another question, how much will the Homebuyer Dream Grant provide for one individual buying a single family home? So we're basically offering up to $30,000 per grant, and it's going to be based on technically how much you need based on what your purchase price is going to be. So if you want to buy a house for, say, $200,000 and you've only got, say, $4,000, you might need the full amount for the rest of the down payment, the closing costs, and the taxes and insurance. But if you don't need that much, we might limit that amount to something lesser as far as what the grant would be.
Okay, we have this question here. What if the income of one partner is higher than the other? Is it possible to look at one income? So the thing is that for the grants, it is household income. Okay. So when we ask you, if it's yourself or if it's, you and your spouse and you're purchasing the home together, we're going to verify both incomes. If you're moving on out of mom's house and mom's not coming with you, and you're going to be purchasing the home on your own, then we're going to be looking at your income alone. So when you ask if the income of one partner is higher than the others, is it possible to look at the one income? We actually have to look at both incomes if you're both purchasing a home, okay? Because that would be considered two persons in the household. So that's how it's looked upon. We did kind of mention earlier, though, or Ron talked about the different home buyer dream grant that we have. And it does take into consideration the Homebuyer Dream Program plus a higher income up to 124,000 for 1 to 2 persons in the household, or 3 plus persons, 143,000. So if you're beyond that, I'm going to tell you that there's not going to be a first time home buyer program for you, because that is the highest that we've seen it's been.
And just to give you a little background information, so last year, the Federal Home Loan Bank only offered two versions of the home buyer dream program. One was the regular and the other one was the plus. And they were very limited in funds for the plus. We only received a handful of those grants and they went relatively quick. And again, they haven't given us any guidance yet on what we're going to be getting this year. So we really don't know. So that's kind of a wild card with us right now as far as how much we're going to be getting. And I think we got, well, the grants funded last year, we were able to fund it. When the program started last year, it was in January, and we were able to fund through the end of August. And then after that, we did get a few more grants, so we were able then to go through the end of November. So we had grants almost the whole year with exception of like a month and a half. Now, we're not sure again what we're going to get this year and how long they are going to last, just to let everybody know. They're basically done on a first come, first served basis. And again, the key is you have to have an accepted purchase contract. And the key, and I think Julie said this, but I just want to kind of reimburse it in everybody's mind. It's really important to get a pre-approval. Number one, to know what you can afford. And number two, you're going to need that before any realtor is going to start showing you a house. That's the first thing they're going to say. Do you have a pre-approval? And who is it with and who are you working with? It's nice to do it that way because then Julie and I, we kind of get to know who you are, what you're looking for. And we also get to know who your realtor is, so we can open a little bit of a dialogue with them and feel comfortable with each other, because we typically get calls at night and on weekends like, oh, we just saw this house and we want to put in an offer. So we just need a little heads up, that's all.
I seen that question here because I did give the max on the 1 to 2 persons in the household for the Homebuyer Dream Program Plus program, and everything is based on gross income. So just a heads up on that. You're asking if it was based on net or gross income, and that is based on the gross income.
How long does the pre-approval process take? It's pretty quick. What we, on our end, we're basically pulling credit to see what your monthly debts are. The other half is income, and that's on you getting us the documentation as far as pay stubs and W-2s go. So could it happen pretty quick? It could happen in a day if you need it to happen in a day. So that can be a very quick process.
Okay. I think we're back to a similar question, but if only one partner applies for the mortgage and has everything solely in their name, would the income of the second partner still be included? And what it comes down to is the word household. And so basically, if you're living in the same household and you're purchasing a home that you're going to be residing, both persons are going to be residing in, then we do have to check both incomes. And the thing is, even if one person applies and the other one does not, we're talking about the grants specifically, as well as another program, Sunny May, that we have to actually get the person who's not applying, we have to get their pay stubs to verify their income as well. So even though, if the one person's applying, it comes down to that word household and who's going to be residing in the new home and in the household, whether they're on the mortgage or not. We have to get their income. And typically, if they're a pay stub person, we're going to get their pay stubs to verify their current income.
Another question, I have a recent copy of my credit report. Can I supply that to you, or do you have to pull your own credit report? We actually have to do a credit report pull, and unfortunately, it's a hard pull. That's really the only way we can do it, because that credit report interfaces with our loan origination system where we do our approvals. There's no way to import data from exporting or from external credit reports. So yeah, unfortunately, we can't use it.
Okay, will the loan officer let me know what grants I'm eligible for, or do I have to do my own research? Oh, we definitely let you know. We're here to help you. So we want to help you be able to afford the home that you want. So in that being, we're going to tell you what grants are available. So we'll let you know what grants are available based on your income and so forth. And then you'll be able to make a better determination. We're going to give you a pre-approval that also incorporates the grant so that you know right from the beginning how much you can afford and what you're going to be getting for a grant. So always keep in touch with us when you're looking and shopping for a home, because there's different purchase prices out there, taxes, things, can vary. And so you're going to check what I always say, send me an email, shoot me a text, and let me know what the address that you're looking at so we can determine what kind of payment it's going to be and how much funds you're going to have to come up with before you even put an offer in, so that you know what you're walking into before you put that offer in. So I hope that was helpful.
It looks like that's the end of the questions. Does anybody else have anything else that we could answer? If not, I guess we're going to wrap things up. Oh, wait a minute. What does debt mean when it comes to salary debt ratio? If I pay all my expenses on a credit card, but I'm able to pay it every month, does it count as credit card debt? That's a great question. If you can submit statements that shows that you pay your balances off every month. There used to be an American Express card that had to be paid every month. So if you have a history of doing that, I believe we can make a case for we don't have to include that in your debt to income ratio.
Okay, real good question. Student loan, student loan debt, does it get counted? So recently, student loans, if you have student loans, they've been put into deferment, and they've been put deferment / forbearance, I believe it is. So, so where you're not making any payment. So what we're required to do is we have to follow the guidelines that we are set forth with us, and we have to take a percentage of the balance of the student loan, and we have to include that into your debts. So for example, you go with a conventional mortgage, we're going to take 1% of your balance. So let's say you owe 30,000. So we're going to take a payment of 300 and use that against your debt to income ratio. Now, there's some programs that allow a lesser percentage. So not 1%, but a 0.5%. So therefore, instead of 300, we would count 150, and that would be for Sunny Mae and FHA. So that's how even though you're not making any payments and you're in deferment, we still have to use those percentages to calculate your payment, because someday you will have a payment and we want to make sure you're able to afford this home. So that's why those requirements are set in place for us, and that's how we calculate it. So I hope that helps, and it does go right into your debt to income ratio. Anything else out there? I know we put out a lot of information. We try to really give you everything that we know, and we really try to give you a good start so that you know what you're getting into. when you're looking to buy your first home. So we hope this helps. We have our contact information on our website, the Family First website that we showed earlier, and it looks exactly like that. You can call us, you can email us, and reach out for us. We'd be more than happy to help any one of you.
Thank you, everybody, for attending, and have yourself a wonderful evening.
Have a good evening. Good night.